Front-engine Ferrari values mostly tanked during 2023, causing significant losses for owners and skepticism among buyers.
But something interesting is happening right now. Certain models are bouncing back, while others continue to drop.
So which front-engine Ferraris are a smart buy right now, and which ones should you avoid?
In this video we'll break down the market shift, highlight the models that have stabilized, and reveal the ones which are still a risky purchase.
If you're a value-conscious buyer thinking about purchasing a Ferrari, or just want to understand what's happening, this is the video you need to watch.
Please note that we'll only cover the front-engine models. The mid-engine models are covered in this video right over here.
In that mid-engine market we saw three different kind of price trends. First, there are the models for which prices have been falling at a stable rate. Then, we also have models for which prices are stable or increasing. And in the third category, we have models for which price trends are changing and therefore are a bit more uncertain.
Now, to understand where the market is currently at, we need to understand where it came from. Ferraris are pretty special, but they aren't immune to market fluctuations.
Now, during the pandemic, demand surged and supply plummeted, causing an upward spiral in the price trends. Every Ferrari seemed destined for profits, and there was no shortage of speculators trying to exploit this.
Prices for some Ferraris increased by 40%.
But the party ended in the first half of 2022. Price trends started to top and eventually turned. In the second half of 2022, most cars started to depreciate again, and they did so at above average rates well into 2023.
Now in 2024 the market normalized again for most cars. But as we saw in the mid-engine market update, it also caused a lot of market breaks. Price trends started to diverge again, making it even more important to consider which model matches with your appetite for strong residuals.
We start with the first category, models for which prices have been declining at relatively stable rates. Perhaps it's no surprise that the California belongs to this category. We can see that prices for the base and T versions followed the market trend. A big increase during the pandemic, a top in the beginning of 22 and a decline in the second half. Since the start of the decline, the depreciation rate didn't change all that much. That is slightly different to the market trend that flattened somewhat. Looking at the depreciation rate during last year, we can see that the base models lost 9.6% and the T's 8.2%. Perhaps this also shows that the T is slightly more desirable. It is 5 years newer, but still depreciates at approximately the same rate as the older car.
Now if you're shopping for a base model, you need to bring around $100,000 and it gets you an entry-level Ferrari that's still depreciating. It might be crazy to make this comparison, but if you're a value-conscious buyer, you could also consider the following 8-cylinder from a different brand.
If I also plot the LC500 in the graph, we can see that it's on average $20,000 cheaper and that the depreciation curve flattened significantly during 2024. This of course doesn't apply to the brand new examples, but to the ones from model year 2020 and older. The difference in scarcity level is also reflected in the selling speed. The LC500 sells relatively quickly, whereas the California sell relatively slowly.
Now the second car in this category of declining, stable depreciation rates is the Ferrari Roma.
The Roma divides opinions when it comes to styling, but the depreciation rates are crystal clear. We can see that prices started to fall shortly after its introduction and so far haven't stopped falling. Last year they lost on average 12.2% or $29,300. This is high compared to the other cars, but more about that later. There are some premature indications that this rate is starting to flatten for the oldest Romas, but the change isn't large. In general, the Roma market is declining at a stable and predictable rate, something that's also valuable by itself. This is also confirmed by the carried over inventory percentage. This is the percentage of cars that aren't sold within 3 months. It has been fluctuating around 40% since the end of 2024.
The third and final car in this category is the GTC4 Lusso.
Over here we have the price trends for the V12 and V8 Lussos. Both models followed the general car market and declined significantly between mid-2022 and mid-2023. Yet, the V8 market displays a clear flattening, something that we can't see to the same extent in the V12 market. The flattening in this case means that the depreciation rate decreased a bit, not that the Lussos are no longer depreciating. Compared to last year, the V8s lost 5.7% or $11,500, and the V12s 10.9% or $26,100. Naturally, supply is low in this market segment, so there's some uncertainty in these numbers. Interpret them with care.
And that brings us to the second category.
The models for which prices are stable or increasing. The first car in this category is the 599. Over here we have the price trend for the 599 GTB, excluding the Alonso editions and the manuals. This reveals that prices surged during the pandemic, but didn't correct as much as in the rest of the market. See how this trend is different from the Californias and the Lusos? The market weakened a bit mid-2024, but recovered in the second half of the year. The year-over-year price change ends up at plus 0.9%. This change isn't statistically confirmed. It could be the result of chance. Using a rate of 0% is probably more accurate.
Next up are its older siblings, the 550 and 575M.
Over here we have the trends for the coupes. The convertible variants are excluded. Unfortunately, I don't have as much data as for the other models, but we can see that prices have been stable since October 2023. Compared to last year, the 550 shows an increase of 1.3% and the 575M of 18.2%. The 550 change seems reasonable, but is not statistically confirmed. Using a rate of 0% makes sense. The change in the 575M market is confirmed, but market supply is so small that it doesn't make sense to rely on the increase of 18%. The increase is driven by 3 cars only. Looking at the auction data gathered by our friends of Classic.com, we can see that the market was relatively flat during last year. I do then also think that it makes more sense to rely on the plus 1.3% of the 550 market than on the 18% increase that we see here.
Let's continue with the F12.
Also, this model belongs to the group of cars that has stable price trends. F12 prices surged massively during the pandemic and only saw a relatively small correction afterwards. Since mid-2023, prices have been fairly stable. Last year, they came down by 1.5%, but this change isn't statistically confirmed. Looking a bit closer to the trend, we can see that the bottom of the confidence interval decreased, showing potentially that the market weakened a bit. Though, carried over inventory and discount rates remained relatively stable, so we need to wait and see if this is just a random development or that it will lead to a more significant decrease. If I also add the German market to the graph, we can see that prices have been stable over there as well. Prices decreased by 1.4% during last year, similar to the 1.5% decrease in the US. This change isn't confirmed.
And that brings us to the last category, the one that contains cars for which price trends are changing.
The first model is perhaps a bit of a surprise. It's the A12. We can see that especially A12 GTS prices came down significantly between the summer of 2022 and 2023. They went from $730,000 to $650,000. The decline in the superfast market was somewhat smaller, but not insignificant. During 2023, they lost 9.6%. For the GTS, this was 12.5%. Both models saw a flattening in the curve during 2024. This decreased the depreciation rate to 3.1% in the GTS market and 5.1% in the superfast market. This provides some motivation as to why now might be a good moment to enter the market if you're a value-conscious buyer. There are of course some risks. Supply in the GTS market is for example at an all-time high and they're selling at the slowest rate ever. In January, 53% of the cars that were for sale were also for sale 3 months ago. Though this didn't materialize in an increase in discounts on unsold cars.
The other car that made it to this category is the FF.
Also, FF prices fell sharply between the summer of 22 and 23. Since then, they've been quite stable. Prices have been drifting down slowly. Yet, during the last 9 months, we can see that the market bottom and top increased slightly. This resulted in a depreciation rate of minus 1.5% during last year. It also shows that the FFs might be close to their bottom. Yet, similar to many other models that we discussed, the market is small. Moreover, the signs of a trend change are weak, so you shouldn't interpret this as a signal that FFs will go up in price. Rather, I see it as a premature sign that they might have reached their bottom. Inventory data, for example, doesn't support a price increase, but shows that FF inventory turnover and discounts have been relatively stable.
So we covered now all the three categories, and shortly we'll have a look at the summary data. But before we do that, I need to clarify a few things.
All of the price changes are before inflation adjustments and apply to the US market, with exception of the German F12 trend. Furthermore, you probably noticed that the Portofino is missing. I'm working on this model, but I don't have enough data yet to include it.
Let's summarize the data now.
Looking at all the yearly depreciation rates split by the three categories, we can see that there are clear differences. This didn't used to be the case in the aftermath of the pandemic price top. The Romas, Lusos and Californias fall in category 1. These cars have been depreciating at relatively stable rates for quite a while. If you're shopping in this segment, you shouldn't be surprised to lose these kind of rates on your car. Therefore, they might not be the best option for value-conscious buyers. If you're looking at a California, we discussed that it might also be worthwhile to check out an LC500, bearing in mind that it's of course not a completely fair comparison.
Now perhaps you couldn't care less about depreciation and you're more than happy to lose these rates on a car that you enjoy. But then I'm surprised you made it till here in the video.
In the second category we find the F12, 599, 550 and 575M. Prices for these cars have been relatively stable for a while, and there are no indications in the data that this will change anytime soon. Buying these could be an option if you're a value-conscious buyer. Note by the way that I used the rate of the 550 market for the 575M. Finally, we have the cars in category 3. This one contains the A12s and the FF. For both cars, price trends changed or could change soon. If you have been patiently waiting to purchase any of these, the moment could be here. The depreciation rate in the A12 market decreased significantly, making it a much more attractive option than before, while the FF trend shows premature signs of switching from flat to a minor increase.
Now we need to remember that all the talk about future prices is pure speculation. The price trends that we looked at are descriptive. They can predict the short-term price development to some extent, but not the long-term one. A big adverse macroeconomic event, for example, can push prices down in category 2.
Nevertheless, based on what we saw, the cars in category 2 and 3 seem to be the best option for value-conscious buyers. This doesn't only hold when we compare them to the cars in category 1, but also when we compare them to the rest of the market. Comparing the price changes to the rest of the market, we can see that the cars from category 2 and 3 fall below or at the market average of 5%. Looking at category 3, we can see that the Californias still fall within the 0.5 to 9.5% range. Most cars fall in this area. The Roma and the Lusos though fall in the top 25% of quickest depreciating cars. Yet, as mentioned before, the rate for the Luso needs to be interpreted with care.
And with that we arrived at the end of the video. Now if you enjoy this data-driven way of analyzing car prices but would like to see a video for a different car, head over to my channel. Over there you'll find data-driven market analysis for a large variety of cars. Can't find the car you're looking for? Let me know the name of that car by commenting it down below in the comment section. Once there are enough requests for a certain car, I'll make a video about it. As always, thank you for watching and I hope to see you in 2 weeks for a fresh market update.